afternoon, ladies and gentlemen. It's going to be a very fast update for you today. If you are new to the channel, you better listen quick, guys, because we have FOMC and I will be going live today at 7 p.m. UK time, which will be 2 p.m. US time, New York. We are going to have some madness in the charts today, ladies and gentlemen. We are waiting for the Fed to even declare what their plan is moving forward with regards to the interest rates. 50 basis points is on the table, ladies and gentlemen, but more importantly, more rate hikes are in the pipeline. We want to know, based on whether the actual projections or the press conference itself, will Powell give us that little hint that the terminal rate may be in sight? Word on the street says that they are looking at between 5.2, maybe 5.25%. But analysts across the board are waiting for that moment where Powell declares what they are planning on doing at getting inflation down to that 2% mark. Ladies and gentlemen, if you are new to the channel, my name is Tino. Welcome to Traders Reality. I am about to spit the fire, and I'm going to be saying it pretty quick. So let's roll over to the charts and align ourselves with what to expect going into today. So here we have Bitcoin on the daily time frame. This one is aimed at for my holders and for the guys who like to pick up Bitcoin on a longer time frame. You can see bright as day by the principle of the hybrid system that we have got the vector candle principle right here. We would assume that Bitcoin would try and come back up into this region to finalize the imbalance that is present in the chart. But the problem that we've got, ladies and gentlemen, is the faster they go into this point, the less likely we believe that they're going to continue higher. Why? Because you've got to remember, if we refer over to this article right here coming up, you can see that although the Fed is going to be slowing down on the interest rate hikes, it doesn't mean that they're going to stop going towards the target of 2%. This is the issue that we've got. So we're caught in this balance of, is it good news or is it bad news? There are a number of investors today that have got questions in their minds that they are hoping that the press conference itself will put to bed. But the problem is the Fed uses key words. Mr. Powell likes to say could, maybe, the possibility, potentially. These are all trigger words that are designed to make traders do something in the charts. All right? Rolling down into Bitcoin on the smaller time frames, go to the 4-hour time frame, you can see that Bitcoin is stalling out and holding in this zone. And this is consistent with all of the assets across the board. You've got Bitcoin right here. You've got EURUSD looking like it's doing exactly the same thing, holding out, and it has made a nice move to the upside, which we would naturally expect them to try and come back down and test the narrative. You've also got green vector candles down at the lows at 1.055, and then, of course, down here at 1.040, and the big imbalance down at 1.030. Rolling over to USDJPY, you can see I've got a load of drawings on here. You can see that USDJPY is actually going down and breaking down lower, but it hasn't yet taken out the monthly low at the start of the month, which came in on the 2nd of Friday, the 2nd of December at 133.6. Now, if dollar yen breaks down from this point, happy days. We would then suggest that everything against the US dollar will be going up, which leads me over to the dominance of the dollar itself, ladies and gentlemen. Now, dollar dominance itself does look like it's forming this structure, and it has held out in the Asian session, but that is consistent with the idea that the Fed is releasing its information today. So that's what usually happens. We usually see a calm down in the marketplace before any big news announcements comes out. Now, what I don't like about this is it's got this spiky behavior. Now, when the news comes out, or the anticipation of the news, which will be the New York market open, I won't be able to go live today because I have my beautiful daughter's little Christmas play at her school. Happy days, ladies and gentlemen. But you probably won't see that much of a movement. And if you do, you're going to be seeing the stop runs. Remember, when the US Brinks forms itself, it's a time in the chart itself where price goes up, goes down, goes up, goes down, and then they initiate the move. Now, will New York initiate a high or a low? Because usually on normal trading days, you will see that New York usually travels towards one point and then it comes all the way down to the next point. Now, let me just bring something to your attention, ladies and gentlemen. The S&P itself. Just look at what they did yesterday. Yesterday was a good day for the markets. Inflation is coming down, but the bigger picture is coming into play. Why? Look at the gains that the S&P made to only give it all back. Pressure from Tesla itself, then there's a little bit of indecisiveness with Tesla. We just quickly go over to Tesla itself. Tesla has now for the first time gone down below the market cap of 500 billion, and there are concerns about Tesla. Investors are starting to move away from the idea of Tesla and get rid of Tesla stock. Tesla did lead with the pressure of the S&P going down and NASDAQ overall. If we go over to the NASDAQ itself, have a look at NASDAQ. You can see NASDAQ came down, came back up, and then they got the red vector candle. They gapped up at the start of the Sydney session, and we also now have a gap that we really need to get realized in the chart, which they are sort of kind of completing right now, ladies and gentlemen. But FOMC is going to make it in a very difficult, tight range. If investors are really concerned about what Powell has to say, price will go nowhere during the New York session. So in principle, guys, we have got a long time until the FOMC actually comes out. So if you're going to be that person that likes to trade during these times, you make sure that you keep your risk to a minimum. Stay out of the trades until the news comes out. Now, there are guys out there that do endorse the idea of trading the news. These are seasoned traders. They've sat through enough news announcements to understand. But like I said to you, this is not a static news announcement. We're not waiting for data that will suggest 225,000 people are in employment or the CPI data is coming in at 61. Look at the result of that. The data came out great, but the bigger picture came into play. What do I mean by the bigger picture? The yield inversion. We are at the lowest point in 22 years, ladies and gentlemen, and I will say this to you over and over again to get you to understand that when the yields are inverted, it means that investors are favoring shorter term interest on their returns. So that means they're locking up money for a shorter period of time. So when you see a big pump to the upside and then they see it come back down again, it's because that fear is being engaged in the chart. They want to quickly get the liquidity. People were being sold into on the move to the upside on the NASDAQ, and then they brought it back down again with the vector candle recovery and the resistance again at the 800 EMA. Going over to the bonds itself, guys, you can see the bonds are currently holding out inside of this zone, and we've got 3 hits to the upside. To all my technical traders, some would see this as resistance, but because we've got the FOMC news coming out, it's neither or there. It could go up, it could go down. Problem that I've got is the bonds have been shooting up and there has not been any profit taking or any retracement. Does that suggest to me that traders are starting to shift to the idea of the yields inverting? That means, are they starting to want to leave money longer in to the actual government bonds? This is my problem with it, that big push up. I want to wait to see if price can reach back down into this zone, because this was a big push back in November on the 10th, okay? Now, moving forward, we've got the yields itself taking a complete nosedive and still continuously going lower. Now, what is the importance about the yields and the bonds? When the bonds go up, it means assets overall are starting to go up because traders and bond traders are favoring the risk that the government is taking on. But when the yields go down, that means assets go up. But when the yields go up, assets go down, because it's the government's way of advertising a nice, great rate to invest with the government. Okay? Now, moving on from that, we've got the volatility index itself. Now, the volatility index itself is currently sitting at the lows. Now, what they say is when it's below 20, it's a point where you hold and not do anything. Principally, it's a point where you decide to run the shorts, okay? But when it's high, you buy. So when it's above 30, that's when you start looking at buying. Why? Because that is where fear is at its most. So as the volatility index moves up, assets across the board will be going down, okay? And when the volatility index gets to a certain point in the chart where people can't handle it anymore and the fear is fully engaged, that is when you buy, ladies and gentlemen, and that is in and around the 30, 31, 32 zone in the charts. Okay? Cool. Going back into Bitcoin itself, what can we expect Bitcoin to do? Look, we do have this sideways action. Now, to even tell you where Bitcoin is going to go would be a gamble, simple as. Now, if you are currently running longs in Bitcoin and you've been long since 16,200, technically you don't really have anything to worry about unless Bitcoin decides to take a nosedive and comes all the way back down to recover the vector candle and drop to a 4% move. Is it possible that Bitcoin can do a 4% drop? Of course it can, because it can make a 4% move to the upside. You have to be willing to accept both, ladies and gentlemen. If you are in a trade and you don't want Bitcoin to go down, you have to accept that it can. And once you align yourself with that way of thinking, that is where you are going to be preserving gains in the chart. Okay? Going over to Aussie Yen itself, we do have the concept of the carry trade principle. Now, what do I mean by the carry trade principle? Aussie Yen is the asset that institutions go to, and it gives us the clue that they are picking up assets. What do I mean by that? Dollar and yen are two low-yielding assets. Now, when they are as two low-yielding assets, what happens is investors come over to dollar and to yen, they pick up dollar or they borrow dollar and then convert that dollar into Aussie because it's a high-yielding asset. That Aussie is then used to go and buy stocks, shares, forex, commodities, and you will naturally see Aussie rising, okay, as the dollar goes down. So if we make a comparison to the chart itself, you do this, you'll see it bright as day. Take the dollar dominance itself. Here we go. Dollar dominance right there, new price scale. You will see that as Aussie is going up, dollar is going down, because what they are doing is they are transacting in dollar, borrowing dollar, and then transacting back into Aussie. So they are not devaluing the currency, but there is more of a demand for Aussie, which is why Aussie would be going up, which suggests to us that they are transacting on picking up assets. But as you can see, when Aussie goes down and dollar goes down, there's a little bit of a disparity in the charts where it's an anomaly. But what you'll find is when Aussie goes up, dollar goes down, that means they are picking up assets. But when they are getting rid of the assets, dollar will start to go up, because what are they doing? They are taking the high yielding Aussie and then converting it, selling it back into dollars, which in principle is going to increase the value of the dollar. And if you do go back in time, you'll see that, ladies and gentlemen. So let's just have a look at when Aussie was going down. You can see Aussie going down, dollar was going up. Okay? So keep that in mind. Right now, Aussie is showing us what appears to be a drop in price. It's slowly dropping down. So are they slowly transacting back into dollar? That's the key thing that we're trying to establish here. Okay? Rolling over into the high block. For the people that are leveraged traders, keep an eye out on this. As it stands at the 16,550, we have $4.8 billion worth of long liquidations. Yesterday, we had only this area which contained $5.477 billion worth of long liquidations. Now we've just had an additional zone which shows $4.098 billion worth of long liquidations. They're adding liquidity, ladies and gentlemen. They're coming back into the chart. Traders are in the belief that Bitcoin is going to continue higher. And listen, I want Bitcoin to continue to go higher, ladies and gentlemen. It pays for Bitcoin to go up, but you've got to understand we are in a bearish market. And the bearish market does have bearish rallies. These are the rallies that bring price up. Okay? So however long Bitcoin decides to go up to the upside, remember that the bigger picture is going to be enforced into the charts at some point. Interest rates are going to be increasing. We have a plethora of data coming out next week, especially after the news announcements today from the FOMC, which may cause the market to start turning over. If we just consider the following. Going back into the idea of the NASDAQ and the S&P. NASDAQ and S&P haven't really broken key zones in the chart. Okay? Yesterday's volume in the market was relatively high, but the market didn't gain anything. And that just gives you the clue that things aren't what they are. Okay? Now, ladies and gentlemen, moving on from that. Mad love and respect for watching this video. I hope it has served you in some way, shape, or form, and I hope it was long enough for you to get as much information as possible. Going into the New York stream, or New York Open itself, I strongly recommend that you just sit and monitor the way price moves. If you are reluctant to take trades during this time, then that is a good sign to not trade. Remember, not every day is a trading day. Get that in your minds. If you are coming to the charts to force a trade, then you are going to be forcing yourself to make decisions emotionally. And you do not want to be emotional when you're trading. I can't tell you you can get rid of your emotions. Nah, it's not possible, because you would be a robot. You'd be dead. You wouldn't be synthetic like me. I'm synthetic. People don't know that. I'm not a human being. Put that aside. Anyways, so all I'm trying to convey to you guys is wait for the charts to give you the reason to believe that there is nothing else that could surprise the market. Static information is news announcements like non-farm payrolls, employment indexes, CPI. But today's data is not static. Keywords are going to be thrown out. The market will react positively, negatively, positively, negatively. Then when it's over, then you'll know exactly what to do, and you'll have more confidence taking trades and managing risk once that is established. Ladies and gentlemen, if you are new to the channel, mad love and respect for passing through. Be sure to like and subscribe. I will be going live today at 7 p.m. UK time to bring in the FOMC moment. And that is when the fire will begin in the charts. And I'll be going crazy on there. We're bringing up the book map. We're going to be looking at ATAs. We're going to be bringing up exo charts. Everything that you can think about, I'm going to be having it there, because I don't want to miss any opportunity for volatility during that time. Volatility is a great film to watch, guys. Okay? If you haven't done so already, get over to the Traders Reality website. It should say somewhere along here, and you can download the Traders Reality Indicator, the hybrid system, free of charge. And if you want to learn more about the hybrid system, check us out on Patreon/Traders Reality, and you can learn more about these concepts that I talk about, where I do deep dives into ATAs, the book map, and of course exo charts, and just getting you to understand how to read the vector candles. Ladies and gentlemen, have yourselves a great day, and I'll be checking in with you later. Peace.